Well, here we're looking at Costco. We're starting to see this come back a little bit to the line, near the breakout line. This is going to be important for to kind of hold this prior range right near the 50% retracement level. We felt that we could see this kind of move back up into that range. Here is the average true range I've set up. This is kind of helps with get a feel for where you could put your stop based upon the average true range at the time. And obviously, depending upon where you might want to put it, it could be anywhere. Like you could put it up higher near the prior pivot. Prior pivot here, if you depends on the leverage that you have and your feeling on it, and how many shares. Because quite honestly, you might have if you don't have a lot of shares shorted, then it doesn't matter. You might be allow it to go a little longer than you normally would if you were highly leveraged. This is why when people say, "Why don't you have stops?" I think it's kind of it's a relative scenario based upon the trader's ability. If you have 10,000 shares short, you're not going to have a long wide stop. You're going to have a short stop, and you're going to have it very very close, just in case it starts to break back to the upside where you can lock in your profit. If you have 10 shares or 100 shares short of something, you can afford it to go 5 to 10 points the other way and to allow it to kind of come back. So it really, really depends on that. And so sometimes when people get a little critical about short stops, they need to understand the purpose of what they are. They're there to make sure that you don't get caught in a bad position. And a lot of times, say for example, here's a perfect example. We see a gap up. Say for example here, normally you'd stop would be part of what helps generate that big move, because the positional specialists or whoever's managing that, depending on whether it's the Nasdaq or on the New York, they see order flow and they know how much where these orders are. And what happens is when they are opened up past these stops get automatically executed. So the whole point is, why would you want your stop to be automatically executed when you know that you may be getting caught at the high for the movement, and you may see this kind of try to come back in the gap there. Stops are important. Don't get me wrong. They are very, very crucial. What we tried to do is give you support and resistance ranges and good numbers of where you could see when things start to change. And you could use these average true ranges. You could use your prior pivot lows to determine that Fibonacci retracement ranges, where if it starts to break past that, you can exit on that. But what we're really looking at here is a longer term kind of play that basically on this pivot right here, we could imagine 10 points based upon where we're at and still be okay. I usually try to use a 10% rule. That's basically what I do. If I see things going past 10%, I start to kind of realize that, hey, you know what, it's getting a little far from us, and sometimes we exit. Sometimes on a smaller dollar stock, I have to be quicker on that and get a little more anxious to exit those trades quicker, because I don't want to be in something that can have high leverage when it's weakening here. So it depends on how you play it, and that's what I look at. Anyway, that's it for Costco. Watch for any potential move to this 148 range.